For today, oh, by the way, my name is Patricia, InsureHive's agency success manager. And for today, our presenters are, of course, Brian Hannigan, co-founder and CEO of InsureHive, together with Anthony Espinosa as our special guest, representing Orion 180, territory manager for Florida. Take it away, gentlemen.
Great. Thanks, Patricia. Yeah, we every Tuesday we have this I call it open mic night or hour of power at InsureHive, and we feature a special carrier that I think is doing great things that I recommend as far as everything from ease of use to technology to providing capacity in a market that really needs it. And today I wanted to welcome Anthony Espinosa from Orion 180, one of our fastest growing partners. And what we're going to do today is just kind of go over the appetite guide, where we're winning, where we see the market heading, and how you guys, if any questions at the end, feel free to chime in. It's kind of just a free flow. It's not so structured, almost kind of like a town hall meeting. So feel free to use the chat if you can use the chat, and interrupt us as we go. We'll probably talk for about 20 minutes and then let everybody go at around 11:30. But Anthony, if you could just kind of give us a background on Orion 180. Most people on the call today are already active partners that have been set up, I think. Maybe we have one partner on the call that's kind of on the fence of adding new carriers. So kind of treat it as active agents that have maybe done a quote but not bound one, or maybe have quoted 10 and need help with their conversions. And maybe we can give them some tips maybe on, are you offering this, that? It's the Flex product, right, in Florida. So I know
Absolutely.
there's some customization there, kind of like neat things which I love because, it's usually with insurance, it's you input the system and it is what it is. It's not much massaging but with this product, I feel there's more of a advisor role there where you can kind of build the sandwich for the
Exactly.
client based on their needs.
Yeah.
So that's it.
Yes. So no, I appreciate the introduction, Patricia. And exactly as you said, Brian, the Florida Flex program has something that's very different. It's very unique,
Mhm.
and the agents that enjoy the product or enjoy using the product are truly the ones that take that extra step in kind of educating the insureds the best they can. A lot of times insureds kind of come in with either preconceived notions or thoughts of what insurance should be, or things that they've heard online, or whatever the case is. They don't have the full scope of what things truly mean and understand. And so when an agent can take that consultative type of approach, as opposed to just kind of blanketing the insured with coverages that maybe they need, maybe they don't need. They kind of just go through the process, just not really understanding and just kind of, with a lackluster experience. So, Flex is designed to kind of enhance that in a myriad of ways. The first way is just having a policy that's extremely customizable, not only from a coverage standpoint, but from a peril standpoint as well. And that's kind of what I really wanted to go over today. So exactly as Brian said,
Mhm.
please feel free to put any questions in the chat, raise your hand, or just simply come off mute and ask. I do enjoy the kind of free flowing, open mic type of
Yeah.
setting. So please feel free to speak up if you so choose. Um, so the biggest thing again is going to be that customization, Flex being the name of the product, and so it is very flexible. We wanted to make sure that you're capturing the majority of the business. That's always kind of been our moniker, and really how we've gotten as successful as we are is casting a wide net and catching the majority of the fish. We didn't really want to, and this is in the very beginning before we even had Flex,
Mhm.
was trying to catch the majority of the fish and not necessarily, going to chase the big ones, that come up every once in a while. We're very happy in the market that we serve, which is kind of that everyday average American home. And unfortunately, the average everyday American home is not a 2026 build with a brand new hip metal roof. That's just not the case. And so when folks ask us a little bit, what's our appetite and things like that, I kind of just let them know, hey, we're going to do really well in this sector of home. And then I'll actually go into that a little bit more in depth in a bit. But back to the perils. We wanted to make sure that you are catching the majority of the fish that come in through the door. So 85, maybe even 90% of the business that you're going to be seeing is going to be probably lender-based type of business. So businesses coming in and insureds just needing a homeowner's insurance policy or an HO3 to satisfy their lender requirements, right? Like that's the majority of the business that you're gonna see. That other 10, maybe 15% of the time is going to be an insured that maybe understands their risk tolerance better than others, or maybe a little bit more affluent, or are just looking for catastrophic coverage. And so you can remove perils and you can change coverages, get higher deductibles, do certain things for those folks because they are able to kind of participate in that risk sharing. And so if they are say, hey, what does it look like if we were to remove wind and hail? What would it look like if we were to remove non-weather related water incidents or coverage or wildfire coverage or liability coverage? And so again, you're kind of building a policy to fit that particular insured's needs. Now back to the insured that's looking for that everyday, HO3. You also have the ability to write that with Flex. So Flex can be set for the large fish, or I'm sorry, the catching the larger amount of fish, which is kind of that lender-based business, and then also those might be those affluent people. Flex fits for those folks as well. So you have the ability to remove perils. You don't have the obligation to remove perils. You do not have to touch the perils if you don't want to. If you're quoting this as normal, this has the same exact perils as your typical HO3 will have. Okay, I can't stress that enough, that how this policy is being bound majority of the time in Texas, in Cali, in Florida, is a typical HO3. So I just want everybody to kind of be on the writing under the same assumption that yes, this is an HO3 for the most part. If you're just leaving all the perils as is, but you do have the flexibility to change or remove those. So,
we did go. Yeah, someone asked, does this include wind?
Yes. Yes. So this does include wind. If you leave all the perils as is, as you're quoting, it will have wind included. It's you start removing perils is when you're having that conversation if the situation arises. But again, as you're quoting it normally, or even if you're using a rater and you're quoting it normally, it will give you all of the perils by default. Okay. You're not going to have to go in and quote and then add perils. You're going to have to go in and quote and remove perils if that if that type of insured comes in and starts asking questions. Hopefully that makes sense.
Anthony, you mentioned a comparative rater, and typically in Florida, there hasn't been a comparative rater on the homeowner side, or most agents don't use one just because every day it changes, whether they're in a sinkhole or they're out of a sinkhole. Is this Orion product? Is this a honor rater?
Yes. So for us, we typically see a ton of comparative rater usage, and a lot of it is going to be through Quote Rush. Quote Rush here in Florida is absolutely huge. They have the most amount of users here, and then Easy Links is kind of followed up right behind it because of Citizens. If you're writing Citizens, then you have to quote it through Easy Links. So folks kind of got forced into that one. But yes, we are on both raters, on Easy Links and on Quote Rush. And if you need any help getting that set up, I can certainly assist with that.
Okay, thank you.
Absolutely. So skipping over to the next portion, again, this is the I guess the meat and potatoes of Flex is truly the perils. But there, of course, are other pieces of it that are very important, such as the eligible counties. If you're not writing in these counties, which I believe everybody here today is, but if you're not writing in these counties, Orion 180 is not going to be a great option for you. This is going to be our footprint. It's 19 counties. I'm a bit superstitious, so I don't like the odd number of that. I'm working on getting Pasco approved here, so we'll be at 20 counties. But as of right now, 19 counties. The majority of the population here in Florida is in these 19 counties, and you're going to see a lot of success if you are writing in these counties for us. I'm not going to touch really too much of the coverage and limits. Those are pretty basic things everybody can kind of just glance at and understand. The roof coverage options just kind of shows that there are other ways an insured can share in that risk, that risk participation or participate, I should say, in the risk sharing. There are different ways that they can save some money on premium. What I will say about roofs is going to be that for shingle composition roofs, it's going to be 0 to 10 years is replacement cost, and up to 20 years or 11 to 20 years is going to be ACV. Anything after 20 years is going to be ineligible for shingle composition. Similarly with tile and metal, we go 0 to 20 years is going to be replacement cost, 21 to 30 years is going to be ACV, and then anything beyond 30 years is ineligible. We try to kind of bake in some value to the policy itself. Again, kind of harkening back to something that Brian alluded to earlier, was just that you're really trying to put some value, and a lot of times when you're just quoting a typical HO3, it is what it is, right? And so what we've done is, yes, we have something that can really provide value to the insured from the agency side. That the policy itself inherently has value because you're kind of flexing that expertise, that muscle of, hey, I can get you a policy that's really tailored to your needs, as opposed to you going direct to consumer or you going on the internet and just quoting something out yourself. That's where the agent truly shines, right? You're trying to separate yourself from not only other agents, but from that allure of the internet and the insured just going on the internet and getting a quote without you, right? So you're trying to provide some value. Again, the perils and the coverages and showing that consultative approach and educating the insured is inherently providing them value. But also we try to put something within the policy that can do the same thing. So we have a premium protection option, which is basically just a rate lock. What it'll do is it'll lock the rate in for 2 years. If the insured is paying $2,500 on year one, they're going to be paying $2,500 on year two. The other thing that we wanted to kind of add is a claims-free participation bonus. There's a few different options here that you can see. If they're 5 years claims-free, they receive 25% of the year one premium back. Option 2 is they get a vanishing non-weather deductible. So a few different options there to kind of provide them a little bit of like a reward type of system for them being claims free. I'm sure we've all heard it before, that insured that comes in through the door and, I've been claims free for 10 years. Why does my premium keep going up? Well, this is kind of a way of, rewarding them for that, being claims free and in that business.
Is that reward program where they get, kind of reminds me of like a Capital One, get cash back from your home insurance. That's not rebating, is it?
No.
We can do that. Okay.
Yeah, no, it is.
Is it a physical check that they get in the mail, or is it like a discount on the next year's premium that you take off?
So it's going to be a physical check, and from what we've been able to ascertain, it is completely legal. So we checked in through the OIR from Florida, and it is 100% possible for us to do this, as well as in Texas and in California. So it is a good option for insureds that really kind of mitigate their exposure to having claims and do the right things. And now if something were to happen and they have a claim, it is what it is. We don't want people to feel like they're not able to put a claim in. But for those little things that maybe don't reach deductible, or maybe a couple $100 over deductible, we want them to kind of be a little bit more cognizant of what claims can do, and hopefully they'll understand that. The deductible options, again, if you can kind of glance at that and understand it. Same thing with the discounts. One of the biggest things that I wanted to touch on was going to be the wind mitigation portion. We are not necessarily asking about roof to deck attachment or roof to wall or toenails or anything like that. What we're asking about is opening protection. Not that nothing else matters, but opening protection is one of the most important things to us. Now, when it comes to opening protection, it is required in the Tri-County area. In Broward, Miami-Dade, and Palm Beach counties, it is required that the insured has some form of opening protection. We will accept A1, A2, A3, B1, B2, C1, C2. Those are all acceptable forms of opening protection to us. We will accept impact rated glass, hurricane rated shutters, or even plywood. Okay, so can't stress enough that it is necessary for the Tri-County area, but it is also a large discount. Okay, if the insured has it and you're writing in, let's say, Duval County or something, we will accept none if they don't have opening protection. But if they do have opening protection, covered at the minimum covering the windows, it is a very large discount. So if the insured wants to get a large discount and they want to spend maybe a couple $100 or whatever to get some plywood from Home Depot or something, and they're offsetting that by saving a ton of money each year, it would certainly behoove them to go and do that, because we definitely enjoy rewarding insureds for participating in risk mitigation, and I think you'll kind of come to learn that working with us. So that's one of the major things that I wanted to touch on when it comes to wind mitigation. In certain instances, we will require a wind mitigation form, and that instance is if the home is in the Tri-County area and is 2001 and older. So it has to meet those two criteria. If it is 2001 and older and in Tri-County, we do require a wind mitigation form. I don't see any questions in the chat, so I will continue to move forward.
Is there a wind hail separate deductible?
No, the deductibles are going to be weather related and non-weather related. We just wanted to make it very black and white when it came to deductibles, and keep it very simple for the most part. So you're going to have most of the time probably a 2% deductible on that weather, and then the non-weather you have some flat options that are pretty attractive, and some percentages as well.
And so the age of the roof, is that a knockout question if the roof is 20 years or older, or is it? It is.
It is. So once you indicate what age the roof is, the system itself, to take a step back really quickly, the system does an extremely good job of underwriting for you. We understand that most of you have 20 plus carriers. Let's be honest, you're not going to remember every carrier's guidelines. You'll remember maybe your top 5, maybe even your top 10, but for the most part, it is pretty difficult to remember, everybody's guidelines. So the system, as you're quoting, will pretty much knock things out for you. If you indicate that the answer is yes to something and it's supposed to be a no, the system's going to say, hey, this should have been a no, this is ineligible. Or you say, hey, this is 20 years and it's supposed to be 5 years, the system will say, hey, this is not eligible because of this. So you don't have to necessarily remember every single thing about Orion 180's product. The system will help you with that. So back to your question, to answer it cleanly, yes, the system, if you indicate that it is over 20 years for shingle roofs, then it will say, hey, this is ineligible. Same thing with the metal and tile roofs. If you indicate that it's older than 30, it will tell you that it is ineligible. To answer the question that's in the chat, will you do rental properties or only primary owner occupied? I guess the answer to that is kind of like a half yes and half no. We will accept owner occupied primary homes, but we'll also accept owner occupied secondary homes. The only part of that is a no is the rental exposure. We do not accept any rental exposure whatsoever on the Flex product on our HO3. Because we have a DP product that's going to be coming out here within the next 30 to 45 days or so. And that is going to be more centered around the rental exposure, the investment properties, the LLCs, that sort of thing. So
when is that? When are you launching that?
Within the next 30 to 45 days.
That's
I
great.
have,
so
yeah,
right now
I have the guidelines for it. Go
Okay,
ahead.
yeah, send me the guidelines because that's pretty exciting. As you know, the rental market's pretty big in Florida.
Sure.
Right now I'm up north. Just keep going north of 75 and drive about 2 days and I'm in Michigan. But Michigan and New York, the East Coast people, we tend to buy property in Florida, condos, and go there. It's a seasonal homes to escape the cold. So you'll do the seasonals. But let's say Brian Hannigan wanted to, I'm in Michigan, so I'm not coming down there for 6 months, but I have a property management firm that rents out my condo for 6 months while I'm not there. Is that eligible, or would I not be eligible for Orion 180?
That would be eligible on the DP. We like that very clear demarcation of the homeowner side is going to be owner occupied. The DP side is going to be tenant occupied, investment, that sort of thing. We don't want any rental exposure on the HO3. We'll take all the rental exposure on that DP. So whether it be short term or long term, we're cool with it. We just like the claims process to be as clean as possible. When you start doing, things like, and this is not to cast any aspersions on American Integrity or any other carrier, that does a owner occupied DP product. That's not necessarily a terrible model. It does work for them. And it seems to be very successful. My point is that when claim time comes, things get a little hairy because there's a lot more hands in the pot. There's a lot more folks sides of things that you have to consider. We really like to try and keep that claim as black and white as possible because there's just way too much gray area in insurance as it is. And so, adding more variables to it just makes things more difficult. So keeping it clean, homeowner or owner occupied on the HO side, the Flex, and the DP will allow for that short-term, long-term, tenant occupied, so on and so forth.
Okay, and I don't mean to hog the chat, but I know
no,
we did get a question yesterday. An agent want to know: do you use credit scoring at all? Credit
yes.
in rating? Okay,
absolutely. So that is a great question. So we do pull soft pull credit to formulate our credit, our insurance score. So we do credit-based insurance scoring.
Okay. What I'd like to do with our last couple minutes we have, can you talk through the, is it AUTOS or emergency water?
Yes.
I forget the acronym, what it stands for. There we go. Auto water turnoff system.
Yeah.
And what the heck that is? Why should it matter? Why should insured care? And then
Absolutely.
And the cost to install this thing?
For sure. Yeah. And I think that's that was going to be my last point is the auto system, because there's so many carriers that are constantly taking coverages away. And honestly, to be transparent with you, we're no different. We want to be sustainable. We want to be around for the long term. We want to make sure that we are not hemorrhaging through claims that are, non-weather related water damage. The number 1 and 2 causes of loss in the past 15 to 20 years have been roofs and non-weather related water losses. RUs are normally a severity claim, and water claims are normally the frequency thing. It's that thing that's going to be 12,000, 20,000, and it just keeps popping up and keeps popping up. But as we all know, frequency breeds severity. So over time, you have those $100,000 water claims, and they really hurt carriers. And so what carriers have done is said, okay, we are going to put limitations on water, whether it's a 30-year-old plumbing or plumbing in the home, or if it's pre-2006 PEX or polybutylene or galvanized or cast iron or a water heater above the ground floor. These are situations where there are going to be sublimits. And it's not just with us, it's with a lot of carriers. And so they'll say, okay, we'll put a sublimit on it, or we won't accept it based on whatever it is. What we have done is we've provided a solution. We said, okay, we are going to take this coverage and put a limit on it. If you would like to have that limitation removed, you are going to participate in mitigation of that exposure. And so what that looks like from an insured standpoint is the auto system. Yeah, it's not like some think tank on the name. They didn't do, it's nothing super clever. It's just an acronym: automatic water turn off system. What we've done is simply manufactured a water shut off device. If the insured gets it installed in their home, they have the sublimit removed and they have full water. It doesn't matter if they have poly. It doesn't matter if it's a 1903 home with galvanized plumbing. They will have full water coverage. The point, the how you get to that point is you order autos through our quoting platform. While you're quoting, you can select that the insured wants that they want autos. It is free to them. Okay. We do not charge shipping and handling. There's no admin fee. We literally ship the unit out for free. They don't pay a single dime for the unit. There is a cost, and as Brian alluded to, it's on installation. From what I'm hearing, it is between $250 and $600 to get it installed, depending on the home, of course. On the high end, even $600, yes, it's not a little bit of money, and we get that. It is something. But if the insured can put that investment towards mitigating their exposure to that water risk there, then what we're doing is something it's very different. So let's say they spend that $600, they get it installed on the high end. We remove that limitation. They're getting more coverage, right? They're getting full coverage on the water. The premium is not going up, even though they have more coverage now. The premium is not going up, and they're getting a $150 discount. So that's huge to note, because that $150 discount is mainly set to offset the price of the monitoring. The monitoring is $10 a month or $120 for the year. But again, that $150 is meant to offset that $120 that they're paying for the year. So net, what they're coming out of pocket is the cost of the installation. That $150 discount is applied every single year. All right. So they're they're net positive from the $150 to the $120. So they're already up 30, but they're really just coming out of cost the installation. I think this is a no-brainer for homes 2015 and older.
Yeah, it's great peace of mind too to know it's covered. There's no limits, and I like it. What about this question that you get? You could have these insureds. They're like, yeah, send it to me and I'll install it myself. I'm in the business, or I'm a skilled contractor. Would you allow, does it have to be installed by a licensed plumber and pull permits and all that?
Unfortunately, yes, it does have to, not necessarily pull permits, but it does have to be installed by a licensed plumber. The main thing for that is that we know that it's being done professionally and done the right way. At the end of the day, everybody here could install autos themselves. It's actually very easy to do with little to no experience whatsoever. However, we want to make sure that it's being done properly. And then at the end of the day, what we're using to substantiate the fact that it's been installed is an invoice from a plumber and a picture. So it's
Okay.
not something where they have to like pull permits or anything like that to get it done. They just get it installed. They have full water coverage at that point. Another piece of it that's very important that I wanted to highlight really quickly is going to be if they do not feel comfortable or don't have the funds to get it installed immediately, then they can say, okay, hey, let's not order it right now. Let's order it in 6 months. Let me save up a few paychecks or whatever the case is. They can certainly do that. So it doesn't have to be done at time of buying. It's most convenient at time of buying. But if they want to get it ordered in 6 months or in 9 months or in 2 months or whatever, when they have the money to do the installation, they can do that. The second point is that they keep the unit. Okay, the unit is theirs. All right. Not only is it free, this is a $500 unit. They're getting it for free, but they can keep it if they decide to leave Orion 180 and they go to whomever for a carrier. It's still theirs. They still can have it. It's in their home. It's theirs to keep. I'm sure they'll get a discount from the other carrier.
Yeah, I haven't seen the unit. Does it have the brand name on it, Orion 180?
Yes, it does, and
That's
it's got a little weight to it too. It's actually
Yeah, no,
copper
I'm
on the
just
inside.
I'm picturing just that from the retention standpoint to
Mhm.
have that the name in your even if you switch to whoever
Gotta
Allstate or
throw
something like
gotta throw
that.
the name on it.
Yeah, no, I like that. I like that.
So yeah,
And
it's
how
very
does the
interesting.
insured take picture and up? Do they do it or the plumber has to do it and send it
Oh,
to you guys to a special unique email address or
yeah, everything that you said is correct. They can do it. The plumber can do it. However, as long as they get the picture of it, that's absolutely fine. I've seen some really unique ways of it being done in Florida and in Texas and in California. So there's what I mean by unique is like the installation. Like I've seen some plumbers really do a great job installing it. So if they install it inside, I've seen plumbers do like access panels and stuff so that the insured can get to it if they ever need to, or another plumber can. Not every plumber is going to be that way, but I've seen some really nice installations. And so, pictures are not difficult. Just one quick photo of it, and boom, it's done, and it's pinging to us, and we monitor it. So,
do you know the opt-in rate or the conversion rate on let's say out of 1,000 policies sold across the state of Florida,
mhm.
how many have the Autos
I know
on there?
I know the number of units that we have pinging right now is 20,000, but it's not in Florida alone. That is across all states. I would have to double check and see what Florida
So
is.
twenty
It was,
thousand divided by 100,000 policies.
oh, that's
You think you get about
probably safe to
20%?
say. Yeah, I
Okay.
would say that's probably accurate. I think we just need a little bit more education behind it, honestly, and just kind of getting the name out there a little bit more. Any agent that ever hears about it's like that's a no-brainer, like absolutely. And if you don't sell it, at least bring it up. It's like if you are mentioning it, then at least the insured understands it. The biggest thing about it is that everybody should have some form
Right.
of either water mitigation or fire mitigation, or I mean nobody should want to have a claim, and for a few $100 for a unit that's free, like I would, it's like I would do this, like
Yeah.
anybody really should do something like this. And the biggest thing about it is that we're not interested in making a couple $100 on the units. We're interested in saving tens of millions of dollars in the long term on claims. That's what matters to us. We don't care about,
Well, yeah, because
selling the unit to you for $100 or 200 or $300.
and didn't when you first launched it, didn't you charge?
We did. We
Yeah.
charge, yeah.
And
So
so
the
whoever
our
I
fee and
talked
the
to said,
cost.
no, this should be a freemium model because you're gonna make the big money on
Exactly.
your profit and your loss ratios. So you should just give it away for free. And then it
Absolutely.
looks like that caused friction in the sign up process by charging them. And
Hmm.
so I'm glad they made the decision to offer it for free. Usually what happens in life and these new technologies come out, there is that learning curve from the society. And I think 5 years from now, this is
Hmm.
just going to be the norm. It's going to be, what do you
Absolutely.
mean you don't have this on your home? It's become standard
Hmm.
business practices, and the consumer will get used to it. Almost like I remember 20 years ago when I was trying to explain EFT to people. You're like, no, Brian, I want to come in the office and make a payment or mail me a billing statement. And it's like, no, we're going to take it out of your checking account. and they would say, no way are you getting in my checking account. Right.
Mhm.
And then I had 10%, then 20, then 30%. Next thing you know, my whole book of business was 100% EFT. But it
Yeah.
took a good 3 to 5 years to everyone get used to that. So I think that's what's going to happen with
Yeah.
this.
Same thing with like replacement costs on roofs and even the sub limitations on water. Like it was something that we offered before we just started writing in Florida in April of last year, but we were writing in the Southeast for years and years and years. And so, I remember in South Carolina it was kind of a difficult sell because we were like, hey, we're doing, replacement costs on roofs at 15 years. And nobody was doing that. And so the market kind of slowly shifted that way while we were doing it first. And then folks were like, okay, well, this is standard practice now, and it is what it is.
All right. Well, before we wrap up, one of the questions I get is sometimes how do I get appointed with InsureHive to start selling this? And Brian, is there any volume requirements with this? And Anthony, how can you speak to the volume requirements? I always say if you're using it and quoting them, you'll get your share of business. But is it
Absolutely.
100,000? Is it 10 million in first year premium?
Yeah, we like to see 10 million.
Yeah, that's what I
That's
figured.
the healthy, low bar, I think. No, we the biggest thing about us, and you hit the nail on the head, Brian. And, everything that you said, it's just utilization.
Yeah.
I in my past life I was an insurance agent, and I would have carrier reps come into the agency all the time, and oh, Anthony, you're doing a great job quoting. Where are the bonds? And I would tell them all the same thing. You give me a bindable product and I'll bind it. It's that simple.
Hmm.
We don't want you to feel like you have to force place business for some volume requirement. At some point, we'll get to the point where we are going to have a volume requirement, I'm sure, because of just sheer size and scalability. But I want you guys to feel comfortable with the product. The utilization will ultimately breed binds. You will convert if you quote us. I promise. The system is extremely user friendly. It is extremely efficient, and the pricing is competitive. So if you just quote us, you will find success and then feedback. If you are able to give me feedback, I would greatly appreciate it. That's kind of how we get to the point where we are now is, the changes that we've made and brought about because of the feedback that we've gotten, like the auto system, charging $300 for it up front, and then we were giving a rebate on the back end. It's like, hey, let's just skip that process. Let's just make it free. Now we're seeing a lot more conversion, a lot more take up. We do these things because we're able to pivot very quickly. It's kind of one of our strengths is being able to do that. The last thing I'll leave you with is a little bit of kind of back end information. This is a peek behind the curtain. This is just since the beginning of the year. So let's say effectively 60, 65 days, taking into account holidays and weekends. This is how we're doing right now in the state of Florida. We've written about $12.6 million worth of premium in the past 60 or so days. The majority of that is coming from the Tri-County area. If you're in Tri-County, you are going to run into us. I promise you. Other counties outside of that are also seeing success are Brevard County, Lee County, Hillsborough, Pinellas, Sarasota, Collier. So you are seeing, like I said, we are seeing some successes in a lot of those areas. So if you are in any of these areas, I would say this is anything Volusia, Flagler, Duval, St. John's, and Nassau is just a volume thing. We don't have a ton of activity out that way, but we're very competitive there too. So we are competitive. If you are running us, you will see that you will start converting. And if you see, hey, Anthony, that we are out of competition or competitive aspect with our premium by, let's say, 10% or whatever the case is, that's that feedback that I'm expecting to hear so that I can make changes to that particular area. So I hope that's fair. I hope you guys can kind of understand, and the numbers weren't to gloat. This is to give you confidence in knowing that we are, going to be competitive and where we're seeing a lot of success. So I will get off my soapbox, and hopefully everybody kind of took something away from this. Brian, did you have anything else for me?
No, I think that's great. Does anybody have any questions that's on the call? You can either use the chat or Patricia, is there a way to unmic everybody?
I've actually everybody. So if you have questions, you have that option. Just unmute yourself from your end, and yeah, you can share whatever thoughts or questions that you might have.
What I did is I put my email in the chat, so email me and we can, if you want, you get access, and the appointment paperwork is pretty easy. Anthony usually kicks that out pretty quick. And Anthony, you still probably have a call and kind of go over the agency's expectation.
Yeah. Normally, I like to have a chat just to kind of learn a little bit more about the agency.
Yeah.
You're pretty much guaranteed to get on, so don't worry about it being like a vetting. It's more just kind of a formal. Hey, just wanting to learn a little bit more about you, your processes, maybe lead generation, marketing efforts, things like that, and of course, answer any questions you might have for me. Quick 10-15 minute call.
Yeah. I did get a text. You're active in Kissimmee, Florida.
Unfortunately, we're not. We're just active in those coastal counties for now. Kissimmee is more center part of the state, like by Orlando. At some point, we may entertain the interior part of the state and opening up, giving access to a few more areas. But as of right now, we're going to forego the center part of the state. The loss ratios there are kind of climbing, and premiums are going down. So that's not necessarily the recipe for success that we want right now.
Right. Now, does it matter if the agency is based in Kissimmee, but they're writing, maybe they got a network of mortgage brokers writing in Boca Raton?
No, that's okay.
Okay.
We certainly prefer the folks that are domiciled in those counties, but if you have somebody that has decent lead generation and Boca or Fort Myers or whatever in our footprint, we're more than happy to entertain those conversations for appointment as well.
That's good. That's interesting because not to throw anybody on the bus, but there's a large company here, headquartered in Lansing, Michigan, called Auto Owners. And they actually, they're so old school, they actually look at where your office is located, and that's how I don't think they've appointed anybody in 100 years. But
I was going to say it's impossible to get that appointment.
The world has changed, how consumers purchase insurance, how the agents market. It's not like the old days where there'd be a State Farm in every corner, right, in strip malls, and that's how they needed that, because that's how the customer chose to buy insurance products locally. Now everything's done mortgage e-bill or over the phone. I mean, the agents on the office can tell you this. I mean, when's the last time anybody came in your office and you got a knock on the door? I'd like a quote. Most agents, probably preferred agencies, would probably say, go elsewhere. We don't accept walk-ins. You know what I mean? Just a different model.
Yeah, for sure.
Unless you're a non-standard auto agency, that's how they make their living, the walk-ins. But on the home side, I think it's all done over the phone, which is tough because there's a lot to talk about, right?
For
Autos, customizing your coverages. The customer only has 10 minutes to talk, if that, right?
Exactly. Yeah.
Or I've seen it where you're not even talking to the customer, you're talking to the realtor, the mortgage guy who has no clue about insurance. And so it's you got to get a hold of the decision makers. All right, I'll get off my soapbox when it comes to that, but all right. Well, thanks again. This has been a great, very, 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 very helpful, Anthony. Everybody has your contact or my contact information. Feel free to reach out to me. I'll stay on the call just for a couple minutes, so you can hang up now, or you can just ask me anything, and we'll see you next Tuesday.
Sounds good. I appreciate everybody. Thank you very much. All right. Have a good day.
You bet.